Hi, I want to talk about how to stay on top of your business's viability and what you need to know. There's no doubt that over the past year or so we've seen a real shift in the ATO's stance on debt collection and lodgement. So they're becoming far more active and assertive in chasing these debts and lodgements. Now that, in addition to rising costs and cash flow pressures, the environment you're put in from a business perspective is really challenging, and your business is potentially put under some strain. So you need to ensure that your business is future-proofed, and I'm passionate about making sure that you achieve that. So as an accountant and advisor, I want to outline a couple of key steps you really should do right now to make sure you're staying on top of your business's viability and that the financial health is there and you protect your asset. So the first thing is, don't wait for trouble. Check in regularly. A lot of business owners don't meet with their accountant on a regular basis. Once a year is definitely not enough. I would recommend monthly, at the very least quarterly, with some interim catch-ups in between. You need to review your financials, your cash flow, so you can spot any potential issues early and do something before they escalate. Number two is watch for early warning signs. So some red flags to suggest that your business might be under a little bit of stress would be falling behind on your BAS and your tax or your superannuation payments. Increasing correspondence from the ATO with regards to overdue debts. Some persistent cash flow problems or difficulty paying suppliers on time. Potentially losing some key staff, or just simply feeling the need to avoid calls or emails that you're not comfortable responding to. So if you recognise any of those, then you probably need to reach out, because early action can make all the difference. Number three is understanding the ATO's approach. So since about mid-2023, they've been far more proactive in collecting debts. They're now willing to use measures such as director penalty notices, bank guarantees and sales garnishes, tougher stances on payment terms. No longer can you get those quite extended terms. So this means that you need to stay compliant. You need to keep your lodgements up to date. You need to keep your communication open so as you can avoid those nasties. A little tip on this matter: not lodging your activity statements on time because you may have a debt that you don't want to realise only results in further penalties and interest, which now can no longer be claimed as a deduction. So irrespective of what debt your activity statement might levy on your account, lodge it so you don't get the failure to lodge on time penalty, and we can then manage it via a payment plan that's suitable. Number four is use cash flow modelling. That enables you to make informed decisions. It's important to know what's coming up with regards to your cash flow needs, and you can run some what-if scenarios from a revenue and or cost perspective. This modelling helps to provide some clarity and allows you to plan ahead with a bit more confidence. Number five is engage early if you're concerned. If your business is really not going well, then maybe engaging an insolvency specialist can help. And that doesn't mean that your business is doomed, because there are alternatives that you may be able to take with regards to your business and still continue to trade and come out of it quite well and potentially eliminate some debt. Number 6 is protect yourself and your business. Make sure that you're operating under the right structure where typically a corporate entity is appropriate. Keep your documentation up to date. Register your assets under PPSR. Ensure that you have clear agreements with all key stakeholders. These things can protect your assets and in some cases your personal liability, which is critical. So your accountant and advisor is critical in your business. They're part of your support team and they want to make sure you succeed. So engaging with them regularly can help to assist that. It can help to monitor your financial health more frequently to make sure everything's in order, keep up to date with the ATO compliance, help you model or plan some cash flow, and guide you and help to restructure if needed or simply get the most out of what you're doing and your personal situation. Early proactive steps are more effective than late stage fixes. So if you're seeing signs or if you're not comfortable, then reach out. And you should be reaching out as regularly as you need to. Hope you found this useful. I'm here as always to assist if you need some assistance. So don't hesitate to get in touch. But look forward to speaking with you soon. Bye for now.